Hey folks, welcome to the Rate Update with Dan Frio. Today is April 6th, 2021. You're going to like these numbers. Don't go away. So for those that follow me, thank you so much. Last week I was gone, didn't let everybody know. I'm healthy, everything's fine. I just went away on spring break. Ever since I've been back, rates have been doing very well. And last week when I was gone, usually what happens is rates just skyrocket. So let's get on to what's going on today. So the headline news is today's mortgage refinance rates continued downward trend. So let's get on to it. What's going on today and why? So let's see what's going on. The MBS market is up 19. As we all know, up is good. So what happens with up? Up. When the price goes up, what happens? Rates go down, so that's what's going on today. So again, guys, conversely the other way, if the price of the MBS goes down, rates go up. But today we got green, and 19 is a pretty good number. We're probably going to see a little bit of a reduction in rates. Okay, so that's what's going on. Here's the trend that we have over the last quarter. So back around February, the end of January, beginning of February, we started just trickling and trickling and trickling and trickling. And then from there, it just kind of kept going down all the way until March 22nd. Then right through there, we started to stabilize. And look at it, it's kind of nice. Between that time, so about the March 24th-ish or so, we basically have stayed stagnant, which is great. I'd rather have stagnation rate here than this. What's happening during this time frame? Well, a lot of things. The vaccine's doing its job. So less and less people are getting the virus, more and more people are getting the shot, and more people are going back to work, and the economy is getting back a little bit to normal. We see that with the jobs numbers. The jobs numbers that came in last week on Friday, there's about 1 million new jobs that were created in March. That's great news. Stimulus package went out. People are getting their money. People are feeling a little more confident. As I said, when this was all taking place, there's usually an overcorrection in the market. So we overcorrected, now we kind of came back a little bit, and now look, we're starting to stabilize. The good news is, look right here, all these numbers mean something. Okay, these numbers, the ones that go across here, what these are called are Fibonacci levels. So these are basically, just think of these as bumpers when you're bowling as a little kid. They should, when you're bowling, though, it'll bounce around, but it should stay within these parameters, or within these lines, which are called Fibonacci levels. Okay, so that's what we have right here. The other thing that we notice is there's other lines through here that are blue, purple, black, brown, and green. Okay, so what these numbers are the brown is a 25. It says DMA, 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 DMA. That's day moving average. Okay, so now we're starting to get a little bit back to normal. Why I say that? Look at this number right here. Look at today's chart. Okay, do you see something? Well, we hit the line. We hit the 25-day moving average line and stopped. What that's telling me is we're starting to all these technicals are starting to come into play. Okay, so what we should be doing is we should be moving up to this realm here. We should start, hitting these technicals. So what this is telling me is we have a lot of upward potential, possibly. Okay, but I monitor this on basically a click-by-click basis for you guys, so you don't have to do this. So what's causing this? But what happened today in particular? Well, we came out of the gate. There was a jolt number comes out, and I'll go over that here in a second. That's with our economic calendar. But the number came in saying there's about 7 million job openings. What that's telling us is companies want people back. Okay, they want people back. So we had a nice rally into the morning. Sorry about that. We had a nice rally into the morning, and then we had a little bit of profit taking, and then we kind of stayed steady. I don't really like this, but this looks like it was basically almost a single trade. This little candle, it's not even a candlestick, it's just a little widget here. But the good news is it's green. Green means we may have more buyers than sellers. So we basically ended the day on a little green note, a little green dash. That tells me, okay, things are starting to stabilize. Now, right through here, if we ended the day on a huge candlestick that's red like this, it would scare me, and I would probably look at possibly locking in some people. Why? Is because we had a nice little rally within the last week. Okay, this is let me put things into a little more perspective. If we go back in time, let's go to a 2-year time frame. This might kind of blow your mind. Here's where we were 2 years ago. The MBS market was down here. Remember, guys, the lower it is down here, the higher the rate. We had a huge rally all the way up. Why? Because the pandemic, and rates hit basically historic lows. We're about halfway or a third back to where we were 2 years ago, but we're still much better positioned than we were 2 years ago. Okay, so the trends are good here throughout the macros, meaning longer term. So we go to 6 months, we're still good. We go back 1 year, look where we were 1 year, so we're back to basically where we were about a year ago. Okay, further back than that, we're much better than where we were. The daily charts are going in a good direction. What's causing things today? Well, the JOLT index. JOLT means how many job openings are there. The previous was 6.9 million. The consensus was 6.8. It came in basically at 6.8, between 6.8 and 6.9. Fantastic news for the markets. Okay, so now let's get on to what's going on with rates. So I'm posting these rates here. We go over the FRM means, I'll just say this is a 30-year fixed rate conventional loan, 15-year. FHA, we're going to lump FHA into FHA and VA rates. Those are right here. Jumbo rates are here, and the 5-year ARMOR is here. Guys, these are not my rates. People keep saying, Dan, post your rates. Well, it's hard to do that. What I'll do tomorrow is I'll try to, they don't give me the analytics behind all this, meaning they don't tell me based on this rate, what is the loan amount? What is the down payment? What is the credit score and so forth? They're just coming out generically saying, here's today's generically 30-year rate. I have a lot of people call me saying, Dan, what's the 30-year rate? I don't like doing this because the rate has about 10 different components in it. It's your credit score, your loan amount, your loan to value, what kind of property it is. Are you looking to refinance, do a rate and term? Are you looking to pull out cash? Is it an investment property, a primary home? There's all kind of factors. But what I just want you to understand is here's generically the rates, okay? But also make you realize saying, I had somebody say the other day, Dan, I got like a 2.25 rate with no costs and they're giving me a rebate back. Guys, I'm not throwing that comment out, but it's hard to understand how you got a rate so low when the market is, this is basically lenders all over the country what their blended rate is. So it might be a little different than this, but not much. For example, gas prices. Gas prices in Chicago are about $3.10. Gas prices in Florida, I was just there, is about $3. So it's like you telling me, well, I know gas prices in Chicago are $3.10, but down here where I am, the gas is 99 cents. It's hard to believe. Okay, I'll just leave it at that. But the 30-year fixed rate right now is 3.34. Yesterday it was 3.38. When I say basis points, this is 4 basis points. So what basis points is point blah blah. So when I say 4, it means 0.04. When I say 1 basis point, it's 0.01. This would be 0.9. So you can see they're a little bit better than where we were yesterday, but there has not really been any rate adjustments today. So my assumption is tomorrow's going to be a little bit lower in prices or a little bit lower in rates again because of this, because we had the rally in the market today. Okay, so 15 years, 2.81, down 1 basis points. FHA and VA is 2.78. It's basically down 9 basis points. Jumbos really don't move that much. They're flatlined at 3.33, and the 5-year ARM is 2.69 compared to 2.75 where we were yesterday. So some people are saying, why would you do an ARM when you can just lock in on a fixed? Well, let's say, for example, you're buying a starter home. It's a little condo. You just got married, and probably in the next 3, 4, 5, 6, 7 years, you might have children, have a dog, do this, do that. So you might not plan on staying there that long. The difference in the rate here and here is almost 75 basis points. So if you're buying a $300,000 or $400,000 house, that could be a matter of a couple $100s or a car payment. Okay, so that's generically where the rates are today. Don't focus down through here because these are all a variety of rates with points built in. Okay, so we're just going to focus on this top line right here. That's where rates are today. So that is my rate update for today. And again, guys, I didn't have time today. I apologize. Tomorrow I will go through a rate analysis, and I got a few new tools for us to use for those that call in and are looking to refinance. There's some calculations and some tools that we just got that you can send me your mortgage statement. I can run the analysis, send it to you to see if it makes sense or not. So what I'm asking you guys to do is please give me a thumbs up. Don't forget to subscribe down below. Hit the bell every time I post a video. You get an alert. And I'm asking people out there, if you're building a house, buying a house, or refinancing a house, please call us. And I'm going to tell you why here in a second. But if you're in a forbearance, you need an exit strategy. You need a way to get out of the forbearance. The forbearance might be a good deal for you, and you might just throw the balances to the end of the loan. But a lot of times it makes sense to refinance because of a few things. You don't have the burden of that balance at the end of the loan. Plus, you can get possibly a lower rate. So let's say your rate's 4.5%, 5%, and I get those all the time. Believe it or not, there's a lot of people out there with mortgage rates at 5% still, or the high 4s. We refinance you at 3 or the low 3s. We're actually refinancing all your past due payments that you had through the forbearance, adding them to the loan, putting you back on a 30-year term, and your payment's going down. Why? Because you got a lower rate. So if you say, Dan, my rate's now at 2.5 on a 30-year fix, I'm gonna be like, just keep it. Just keep it. Kick the can down the road. Unless your lender is making you or forcing you to do something, then let us know. But you need to consult somebody, and I would hope that you would reach out to us, me and my team, to consult you, to give you all the options that you have. If you're building a house, what's happening a lot of times is a lot of builders, financing companies, will only lock you in for 60 days. Well, you're like, Dan, my house isn't going to be done for 6-8 months. What can I do? Well, we have an extended lock program in about 20 different states throughout the country. What that allows you to do is lock in at today's rates. So you're saying, Dan, what if rates, go down from here? Well, we have a one-time float down. So as we get closer and closer and closer to your closing, we can do a one-time adjustment and give you the current rate at the time, and we'll continue to monitor this for you and do a one-time buy down or float down to that lower rate at no cost to you. What if rates go up? They go up 0.5%, 0.75%, 1 full percent. Not saying they are, but let's say if they do, you're locked in already. You don't have to worry about that. So that's our extended lock loan program. And I just posted a forbearance video last week. So if you're in a forbearance and you're like, I don't really understand this, I know I can kick the can down the street or whatever, check out my video on forbearances so you can learn more and more about that. So you're like, Dan, how do we get a hold of you or find out a little bit more about you and your team? Well, 2 ways. Go to my website, my YouTube channel, The Rate Update with Dan Frio. You can even just Google Dan Frio or YouTube search Dan Frio and I'll pop up. I have about 800 videos. Or go to therateupdate.com. You can scroll right down here. There's our 800 number, 844-775-LOAN. That's 844-775-5626. You can scroll up right here. This is a calendar. You can pick a 15, 30, or 60-minute consultation. We'll do it either by phone or by Zoom if you prefer to do it that way. Or what a lot of people are doing is our mobile app is fantastic, and every day we come up with upgrades to this. You can almost do your whole mortgage process through the mobile app. Just click right here and get the process started. You can do all your disclosures and everything through there. There's mortgage calculators. We can send you a pre-approval through this system and everything. So if you're mobile savvy, please click on this and get started there. If you don't like the mobile piece and you'd rather do it on a web or a desktop, click the Apply Now button right here. If you're like, I'm kicking the can around if I want to buy a house or refinance, let's find out if it makes sense for you to do either or. Click here if you're just contemplating buying a house, or click here if you're looking to refinance. This is going to ask you about 14 to 18 different questions. Based on the answers to those questions, it'll help me determine the best program for you. So that is it for today, guys. So I hope you liked the video. Please don't forget to give me a thumbs up, subscribe down below, and I hope to hear from you. God bless. Have a great day. We will see you tomorrow.